Hi, John. That's right. I'm joined now by the CEO of the Trade Desk, Jeff Green. Jeff,
Hello.
Thanks so much for joining us here from CES.
Oh, thank you. So glad to be here.
So I know you have some big announcements here, but before we get to that, I want to get your big picture outlook on what's going to happen with the ad market this year. There's been so much talk of a contraction. What do you expect to see? Because your platform is a place for buying and selling of digital ads, particularly premium digital video content.
That's right. So, well, first of all, there's, of course, some amount of pressure on everybody in this environment. And, of course, advertising is something that CFOs and CMOs look at as something that they have to make every single dollar count. That's where we come in and we do a very good job of helping CMOs be data-driven. But we also have this amazing secular tailwind around streaming, which is when consumers are under pressure, they will often look at their subscriptions and say, I would rather see ads and pay less. And as a result, we get this secular tailwind actually accelerate when there's economic pressure. So it can be a little bit hard for us to see what's happening on the macro because we benefit so much from even those small adjustments.
So you're benefiting from the launch of Netflix with ads and Disney Plus with ads. But overall, do you think, and are you already starting to see brands spend less or be more careful about where they're spending?
Well, they're definitely being more careful about where they're spending. And what we're seeing is a lot of brands being careful not to spend as much on UGC.
User-generated content.
User-generated content. Things like Twitter or Pinterest or YouTube, and instead move towards more premium content. And because those premium content providers are giving more opportunities to advertise and you're associated with premium content, the ads are big on a screen that capture your attention. There's a lot of people in advertising that are flocking to that form of advertising.
So let's talk about your announcements here. And first, your announcement with Paramount. You already had a deal with Disney to sell ads on their digital platforms. What's the news with Paramount?
Well, so with Paramount, we've already been working with them on the ad side. We'll continue to expand that, and this is partly about that expansion, but it's also about using a currency for the internet called Unified ID. And what that does is it makes it possible for us to provide better personalization on Paramount, the same way that we do on Disney and many others. We work with all the major providers. But what that does is it makes it so that the ads are more relevant to the person watching them.
And so your other news here is called Galileo. It's a new tool to help advertisers get around some of the limitations that Google is going to be putting on their ability to target.
Yeah, so what many of the big tech companies have been doing is limiting the ability to use their data in any capacity. So what's happening is advertisers who have lots of data about their customers, that they've built relationships with their customers over often decades, they want to put that to work so that they provide personalization to them and provide relevance to them. So it becomes more important to use that first-party data now than ever. It's more valuable now than ever. And so Galileo's a very streamlined way for them to put that to work, using their partnerships and integrations with companies like Salesforce and Snowflake and others.
But so for people who've been watching this industry, Google's expected to be getting rid of cookies in 2024, so making it much harder to target consumers. This comes after Apple made it much harder for the likes of Meta to target consumers, and that was one factor that was really weighing on Meta's shares. So my question is, do you see these changes coming from Google being as damaging for the likes of Meta and Snap and others as Apple's changes were?
I definitely don't think that they will. But part of that, part of the thing that is a little bit different for us and for other segments of the ad ecosystem is that there's cookies that affect the browsing web, but so many dollars have already moved to in-app and mobile, which has a different limitation. But then there's also streaming. And because our focus is on streaming, it's immune to the problems of cookies. And because almost everything in streaming, you log in, personalization is available on almost 100% of what happens in streaming.
And so do you see the ad dollars that are coming to your platform, are they moving over from traditional TV, traditional radio? Where are ad dollars shifting into this year?
It's really from all of it. So there are those that you can't be very data-driven in digital. Those move over. There are those where you can't be as data-driven in traditional television, whether that's broadcast or any other form of traditional media. Those are all moving over as well. So it's really coming from everything because of the fact that programmatic ads are very data-driven. It makes it possible for people to be more relevant, but also to do more with less.
Looking at your stock chart, the Trade Desk stock chart over the past year, and I think we have it up now, we see the stock decline as we get news. Every quarter you've seen it decline as you've gotten the news out from Meta and Snap as they've been talking about their challenges in the ad market. And then it goes up on your own earnings news, but it definitely does seem to suffer as the broader ad market indicates other challenges. What are investors not understanding or getting wrong about your story?
I think the thing they get wrong most is that they think we're all in the same bucket of just sort of ad tech or technology companies that are funded by ads. And what we do is we're a buying platform to help people make better decisions about which platform to buy on. We are not a destination. So if Snapchat loses users, then they're going to suffer. But that doesn't have any impact on us because we're representing the buyer and helping them select across millions of websites and hundreds of streaming services all around the world. So if one loses users because it doesn't have as good a programming as it did before, we just buy on something else.